Hello, everyone. Thanks for joining us this morning. We're really looking forward to this webinar. For those of you, my name's Brad McEwan. I'm your host, moderator, just sort of facilitator, if you like, this morning. If you've been a part of our webinars, Ask the Expert series previously, you'll know that what we're going to do to kick things off, we'll just wait for a few people to log on. That'll just be a minute or two, and then we'll get straight into it because, as you may have gathered, when we talk about Ask the Experts, that's not me. I'm the facilitator. So we will hear what the experts have got to say. Some of you will have heard from one of our experts previously, but maybe not the other two, and you will really enjoy what they have got to say. A little bit of housekeeping before we get things underway. We are recording the session, and a link to the session will be sent to you so you can watch it later on. Please join the discussion with your questions, and we've really enjoyed that in the previous webinars. Type into the chat function at the bottom of your screen and we will answer the questions in real time. And a reminder to set your chat box to all panelists and attendees. So if you do that, we can see your questions and we will fire away. This is going to go for around about an hour. And once that's all done, as I say, we'll be able to send you a recording of it. And even those people that weren't able to jump on today will be able to send the recording there as well. So look, I think we might get things underway because we have got a lot to talk about here in our first webinar for 2021. This is the first in the Ask the Expert series of 2021 and a follow-on from last year's Beyond COVID, the economic impact and safeguarding your financial well-being. As commentary and focus on the economy increased in 2020, we heard of the immediate impact of COVID-19 and, don't we love this phrase, the new normal, the new normal. How often did we hear the new normal? Well, as we move further into 2021, what does the new or next normal hold for the Australian economy? As states and some industries continue to open up, other industries remain shut down. And the end of JobKeeper, as you're all aware, looms. How will the economy react? And how has that outlook changed over the last 6 months? We also want to know how everyone's feeling. How are they feeling and are they heading into the year with some optimism? I like to start our webinars with a little story. This one relates to numbers. It's only a very quick story and you'll soon discover why. And I think you'll like this story. A number of years ago when I was working at Channel 10 in Brisbane, somebody emailed me and told me that I should do a story on Ruth, an athlete. So I did do a story on Ruth and we went and we filmed her training in all her athletic gear. Now it's probably appropriate at this time, talking of numbers, I should mention that the day I met Ruth, she was 96. She started competing in athletics when she was 71. On her 100th birthday, she competed in athletics. One of the great things that Ruth taught me was getting older is not something to be frightened about. It's something to be excited about. Because anyone who's competed in masters athletics knows that every 5 years or so, you go up another category. So every time Ruth had a birthday, she was so excited because she got to go up a category, break more records and set new world record times. Now I'm about to turn 50 next month. And when I think of Ruth, I can absolutely honestly say, I am so excited at turning 50. I'm not pessimistic. I don't fear getting older. I am excited like Ruth about the opportunities that lie ahead. So a lovely little story as we head into 2021. And as you can see, there's a nice little tenuous link there around numbers, which is appropriate given this is a financial webinar today. Now, you can see our wonderful experts there. It is about time that I introduce them. First of all, we have Beatrice Yeo, economist at Vanguard Investment Strategy Group. Some of you will have heard Beatrice in a previous webinar. She's absolutely fabulous. I've told the other guys that Beatrice has set the bar up here. Also, we have Dan Testa, Senior Advisor at Tribeca Financial. Hello, Dan. Hello, Beatrice. And joining us for the first time, a futurist at Versa Agency. Whenever I think of futurist, I think of Back to the Future. I don't know why. Tomas Haffenden. Thomas, great to have you with us as well. And we thank all of you for joining us. Beatrice, we're going to start with you. Now, last year, we heard how the economy was tracking 5 months into COVID, and you mentioned that this would be one of the deepest recessions in history, but also expected to be one of the shortest. You were spot on. It's also 12 or almost 12 months to the day since a state of emergency was announced in Australia and our world changed due to COVID. Can you give us a summary of the current future outlook? Is the economy responding as we expected?
Yeah, sure. Certainly 2020, was a very challenging year for all of us. I was talking to my cousin late last year, and he was just complaining and saying how he was really upset that he couldn't do trick or treat during the Halloween period. And so to cheer him up, I was just telling him that, hey, you don't actually need Halloween in 2020 because every day was so scary and so dark and gloomy. I don't know if that cheered him up or made him feel worse. But I think, this analogy really sums up how people felt and, what the sentiment was last year, whether it's related to the economy, on the health front, or even psychologically. Now, looking at this year in 2021, things definitely look to be less scary, especially now given that we have the vaccines. But, given that the virus is still circulating within society, we still think that the outlook is very much contingent on health outcomes, in particular, how fast the so-called immunity gap closes. And, on this front, I would say Australia has been very fortunate in, the containment of the virus. Whether we look at the number of daily new cases, for instance, daily COVID cases in Australia have averaged less than 20 over the last 2 months versus closer to, over 100,000 in the US and parts of Europe. And, it's really these better health outcomes, we think, that places us in a much better position for the recovery, which we have started to see play out in some of the data that we've got, whether it's the GDP data release that we got, a couple of weeks ago, that basically showed that for the full year 2020, Australia's decline in GDP was only around 2.4% versus, that of 3.5% in the US and more than 5% in parts of Europe. And when we look at other high frequency indicators like Google mobility indicators or restaurant bookings, for instance, those indicators are also showing that Australia's recovery and rebound has also been much faster than most other developed markets, thanks to the better containment of the virus. Now, this better starting position, is why we think that Australia is also much closer to normal or to our pre-COVID levels, and why we also expect output to return back to its pre-COVID levels by the first half of this year, compared to later in the year for parts of Europe. So a pretty positive growth figure there, which we think could position us better for 2021. And in other places, when we look at the labor market, for instance, we are also seeing some green shoots there. Whether we look at job hiring intentions or job vacancies, those have remained very strong. And even looking at things like the underemployment rate, which essentially captures the number of workers working fewer hours than they would like to, those have also dropped to levels below what we saw during pre-COVID times. So all in all, I would say a very solid year for Australia in 2020, and we think that this provides us with a very solid and good base for the economic normalization in 2021.
Beatrice, a solid year you touched on there, and that's fantastic to hear, all things considered. We have had somewhat of a safety net in the form of JobKeeper, which will end at the end of this month. We know that Victoria remains the hardest hit by the pandemic. 625,000 workers still relying on the government since the end of December. What's going to happen? What do you think will happen for the economy or to the economy once JobKeeper is no more?
Yeah, Brad, when I talked about the faster recovery in Australia, that can be positive or not so positive news, depending on how you see it, right? On the one hand, as we just touched on, the strong rebound in growth is good news because that means that we're much closer to normalcy. And, it also means that the time taken to have the output gap to close is also reduced by a lot. But, on the other hand, it can also be less positive news because that also means that, there's now less need for so much policy stimulus And it's certainly not in our base case to see the JobKeeper scheme being extended beyond March. Now, while this may certainly create some concerns for people, we think that there are a couple of mitigating factors that could help to offset some of this impact coming from, the JobKeeper removal. Three in particular I would like to touch on today. First, if we think about it, the largest reduction in fiscal support actually already occurred last year in October, where the number of JobKeeper recipients actually fell by around 2 million. But yet, even then, we didn't actually see much impact on spending or on the broader labor market. The unemployment rate at that time during that month only ticked up about 0.1 percentage points, and employment, was certainly not stopped from rising. So, and similarly, I think if we look at, countries like New Zealand, for instance, New Zealand can be a good leading indicator for us in Australia. And they too also have a similar, JobKeeper scheme, but theirs is called the wage subsidy scheme. And, looking at how the labor market progressed when that wage subsidy scheme kind of got tapered in November, we also didn't see a sharp rise in the unemployment numbers in Q4 of last year. So, while we could certainly see some job losses come April once the JobKeeper gets tapered off, especially in virus-sensitive industries, we don't think that it's the impact. We think that the impact will be manageable, just based on what we've seen so far. So, that's the first factor. Now, the second factor has really got to do with the savings rate, that, the significant buildup in savings that we've seen year to date. And, even after you account for the decline in savings rate in the last quarter of 2020, on average, household savings do remain about 7% above pre-COVID levels. And so we think that that can really help to smooth out some of the impact on incomes once the JobKeeper roll off. And then the final factor to keep in mind is that, while crisis support or relief support measures like the JobKeeper is rolled off, we still have stimulus measures that are in place. So we're really not talking about a fiscal cliff per se, but more of, a transition in the type of fiscal stimulus from relief packages to stimulus packages. In particular, I think, the stimulus measures that were announced at the October budget last year are somewhat underappreciated, whether it's, the job maker hiring scheme or income tax cuts or even investment tax incentives for businesses. Those will all see, additional tax savings as well as step up in income returned. So, all in all, bottom line is that the unwind of the JobKeeper, could definitely create some volatility and some headwinds in the numbers in April. But, we think that it's unlikely to result in a sustained increase in the unemployment rate.
Okay, well, that's really positive, and we certainly hope that is the case. And you've been excellent at predicting what was going to happen so far. With all of that in mind, Beatrice, I know this is a hard question, but I'd be really interested in your view and your take. What do you think 2021 looks like for the average Australian?
Well, certainly it'll be a better year than in 2020. Given the much better control of the virus, as well as, now the global rollout of vaccines. And that will allow Australians to, resume their normal life, particularly their social life, which will be important for, the economic normalization of certain face-to-face intensive sectors. However, in every economist dictionary, there is always risk factors. And as the saying goes, a healthy economy begins and ends with health. And so, like what I said just now, health outcomes, we think, do have the ability to push the coin one side or the other, whether it's because of, resurgence in super spreader COVID cases or vaccine distribution issues like what we're seeing in Europe at the moment, or even virus mutations, which could potentially affect the effectiveness of the vaccine. All of these factors could potentially delay the time it takes to reach herd immunity, and may also suggest that our borders will remain closed in 2021. Hopefully not. But, of course, if we apply this to the upside, just as health outcomes can drive, a lot of the downside risk, it could also very well be the key upside risk for this year, especially, if we think about, if vaccination accelerates, such as what we're seeing in Israel, or, existing vaccines prove to be equally effective at combating new virus strains. This could very well accelerate our path to normalcy. but could also, potentially create some inflation risk later this year, which could be a source of volatility for the markets.
Okay, one final question. And for those that if you hear any noise in the background, don't we love Zoom and these live webinars? Of all the days, silence where I live. And this is the morning that somebody's decided to use the whippersnipper right out our front door. I'm enjoying it though. Now, Beatrice, we love optimism and we love positivity. Last year, you talked about glimmers of hope. What are those glimmers in 2021?
Yeah, actually, Vanguard's theme for our outlook this year is titled Approaching the Dawn. And the word, approaching suggests that we're not there yet. We're not completely out of the woods just yet, given some of the lingering concerns over health outcomes. But the word dawn also does suggest that there have and will continue to be, positive rays of light to continue to support market sentiment, whether it's the distribution and approval of the single dose J&J vaccines instead of the current 2 doses, or whether it's a 1.9 trillion fiscal stimulus plan in the US, which will help to support consumption. And here in Australia, we're also looking to the May budget to announce more targeted industry support measures, which should help to limit some of the financial stress that the JobKeeper removal creates. So, all in all, we're definitely seeing more light at the end of the tunnel. But, we would still encourage investors to maintain a very diversified and well-balanced portfolio, given some of the potential bumps along the way.
Light at the end of the tunnel. We love it. Beatrice, thank you. Don't go anywhere because we'll be getting back to you with some more questions. We've already had a question come through, and I think we'll fire this question to you from Linda. Linda, thank you for your question. A reminder, if anyone has a question, jump on the chat function. Our experts are here for you. So if you have a question, fire away. Just make sure on the chat function that you toggle it to all panelists and attendees. Dan.
Good morning.
How are you?
I'm good, thanks, Brad.
Good. We'll fire off here. Last year, we saw people adapt and adjust as a necessity. We had to. 2021 is when they can really start to get their financial well-being in place. I think last year was a bit like a timeout. Now we get sort of back into it. What should people be doing now that we are into 2021? Hopefully we're coming out the other end beyond COVID. What are the priorities?
No worries. Well, the first thing on that front is that we've seen themes with different clients. We've got really good money managers and we've got people who have seen, their finances turn upside down with the reliance on JobKeeper and working from home and a whole range of other things. And the first thing is really to start the conversation with those around you. Not keeping up with the Joneses and focusing on what you can control. That's the first step. Starting to have that conversation starts to ease the burden of money and the mental health impacts that come along with that. And when we talk about financial well-being, we really talk about 2 key emotional triggers that come along with financial well-being. And we use a tool here at Tribeca, and it's called our financial well-being matrix. And it talks to those 2 emotions in the present and in the future. And some of the exercises that we do with clients really gets them talking about that regular touch point with money. And a lot of people don't talk about it. So last year, people were finding that they were just grasping onto a lot of strings at the one time. They had kids at home, they had jobs that they were hanging on to, or they were on Zoom meetings as we are now. So it's really about establishing those baselines, starting to budget if they haven't already done so, and starting to seek advice early. That's probably one of the key themes that people are talking to us about now, especially in 2021 with that dawn that Beatrice was talking about before. There is some light that is starting to appear. Financial markets have responded really well, and people who have stayed invested over that long time have seen that their portfolio is starting to respond positively. But it's really about understanding their relationship with money first and foremost.
Dan, what about, there's a lot of commentary around the financial sector and the markets. Should we be keeping a close eye on it? And if we are, is that going to change how we're managing our finances? Because I know myself personally, you can see or read something and your stomach sinks, but then you'll read or see something else and you go, hang on, no, this is not as bad as I thought it was, or this is really exciting.
Yeah, I had this conversation with a client just yesterday whose father's an avid stock investor and is encouraging him to get involved in the stock markets, and he's just worried because of the volatility. I guess the first thing is volatility can sometimes be a good thing because we understand what is happening in the market. And I think the first point of call for anyone who's looking at the markets is that markets are always going to be volatile. They're always going to have ups and downs. But the long-term trend and staying invested for the long term is truly what being an investor is all about. We see on the news, and I'll use this reference with, you see the stock market every single night, there's the green arrows going up and the red arrows going down. If we had volatility indexes on anything in our lives, such as property, everyone think property just goes up. If you had a letterbox at the front of your house and there was a red arrow when you got home from work, how would you feel on the value of your property? I think the first part of that is having a plan and sticking to it.
Yeah.
A lot of people don't have a plan. They invest aimlessly, or they invest to, again, keep up with the Joneses. They want to invest in the latest and greatest investment. They don't understand the investments. They just maybe read an article about something. So getting some advice is really the first port of call on that front, because understanding how markets react and also understanding that sometimes not making a decision is the best thing, waiting and seeing what transpires and having advice from someone, from a professional, such as an advisor. If you're self-advised and you're well educated and you understand markets, a lot of the time people are holding back, waiting for something to trigger a response, and then they've got a plan in place. So it's all about seeking professional advice, Brad.
You talk about professional advice, Dan. So much commentary out there, and it can be so overwhelming with everything else that's been going on the past 12 months. How specifically, how do we maintain our financial well-being, and how do partners and families talk together, communicate around this?
Yeah, communication, as I started to talk about it, the first question that you asked, communication is the first step. It bridges the gap between the emotional stress and the mental health issues that money causes. Treat your mental health and your physical health, link that to your financial health. Treat it in the same respect. So if you're ill, you go to the GP, you go to the doctor. Treat your finances the same way. If you do that and you start building those habits, when you need something, or even if you just need to check in, hey, I need to get some blood tests, I don't know what's going on. Hey, I just need to touch base with my advisor. We want to start talking about the benefits of coaching and making regular contact with your financial health coach. It allows you to start having that sense of empowerment that, hey, I've actually got this. I'm not worrying about anyone else or anything else. And that communication then starts to transpire into children and the kids that you have, or the family members, and all of a sudden barbecue conversations don't become a matter of, oh, I've got this great advisor and he's made all this money for me. It's about, hey, what's your attitude towards, money, and how are you going and how are you feeling about your current circumstances? I know these themes probably started once we got back into backyard barbecues and the like after the COVID lockdowns. But I definitely think there's a need to really start those conversations. And in starting those conversations, a lot of the time people start to talk about advice. Hey, I actually have someone. Here's someone that may be able to help you achieve what you're looking for. Whether that's a friend, whether that's another family member, whether that's your GP. I know a friend of mine, a GP, had actually recommended that they go and see a financial counsellor because they were so stressed about money.
Yeah.
So that's something that we talk about with our clients. We're not just here talking about investments. We're here about your relationship. We're here to talk about relationship with money. We're here to then follow on and talk about what your baseline relationship is with money and how that can actually be changed. And in building those really good habits, show you just exactly what you can achieve based on the goals and living your good life and what that is actually, what that means to you, because that really then starts to build those positive relationships. And then from there, people, that changes their lives. It really does.
Yeah, absolutely. Great advice too, and fantastic to touch on the mental health as well, because life's stressful enough, and the last 12 months have just been really stressful. We've had a lot on our plate, so that's terrific advice. We've had another question come through from Shannon about property. So Shannon, we're going to get to that question in a moment, because I'm keen to find out the answer to that question. Thought property was heading down here and it's going up here. Thomas.
Hello.
How are you? Good.
Very well, thank you.
You watch trends that are happening all around the world. What are the trends that have come out of COVID or have been sped up by COVID? And then a follow-up question, how have our behaviours changed because of COVID?
I think it's a huge question, and I think there are two huge things that have happened. Firstly, we've suddenly been locked down, and that for many people is the first time they've ever experienced that. And I think this is sometimes referred to the Great Dispersion, where we were all congregating around our cities. Suddenly, everyone is completely dispersed to their various positions and working from home. I think what's really interesting about that is the fact that 68% of Australian businesses have suggested that they will allow that to continue even when we move through to a state of normalcy. And that's a fundamental and huge change. Firstly, I think for many businesses, that's going to be a real struggle. And that sort of brings us on to the second big thing, and that's the amount of technical development. The fact that Zoom wasn't a word 2 years ago, or rather it referred to something else, but now we're banding it around all the time, I think is a real signifier of how there are some suggestions that the technology has increased 5-10 years in the last 12 months. And that's because it's had to. I think the interesting thing to focus on in terms of working from home, and here's a little phrase that I use that everyone's feel free to steal this, but for me, it's less working from home and more living at work. And I think when you shift your perspective to think about it like that, that brings up a couple of quite major issues, particularly the mental health that obviously Dan touched on there. The idea of living at home means that you can't escape. You're suddenly at work all the time. There's an interesting stat that I wrote about. I think there'll be some links to this article later on, but the average commute in Sydney and Melbourne, roughly the same. It's about 50 minutes each way. Now, the removal of that commute adds up to 11 hours a week, which is roughly 22 days a year. Now, for many people, that's longer than your statutory holiday. So the big question, the fallout from that is, what are we doing with this extra time? And the reality is, because we're living at work, many of us are stuck in front of a computer, either over investing perhaps in our online existence. And I think there's a real dichotomy, a really interesting dichotomy there with the reduction of choice we've seen, where we've gone into the supermarkets and failed to buy toilet rolls right at the beginning, if anyone remembers that hideous few months, and an abundance of choice online, where we've suddenly decided, right, well, we can do all of these things online. The interesting behavior change that I think is probably most notable from a business sense is those businesses who've noticed that and invested heavily in their customer experience, in their CX online, because I think the expectations from consumers have skyrocketed, where they're at home for longer periods of time. They're sat there having a look at global leaders like Apple and the kind of experience you expect there, but then they're flicking across to a more traditional website and they're just not marrying up.
Yeah, fascinating, isn't it, to see how it plays out. Now, I'm the facilitator, you're the expert. That's why you know what the term algorithmic commerce means. It could be Latin to me. What is it and how is it going to impact us?
The first thing I would say is it's one of those terms that I would love to have said that I came up with. It was actually a guy called Scott Galloway, who's more colloquially known as Prof G. Again, I think there'll be a link provided later. I strongly recommend anybody who doesn't follow him to have a look and seek him out on the various social channels. Very, very interesting guy. A lot of very interesting ideas. Algorithmic commerce is basically the idea that, as opposed to with the abundance of choice, what we can do with technology is actually remove choice for the consumer. Okay. And that, in a world of choices everywhere, is actually quite an attractive thing. So put in simple terms, algorithmic commerce is the algorithms they're referring to are the same things that kind of pop up on your Netflix and say, you've just finished watching this, maybe you'd like that. It's basically looking at your previous trends and your previous behaviors and giving you suggestions. Now, things like TikTok, not that that's something that I use, and I'm sure many of us here are aware of it, but not regular users, has a incredibly sophisticated algorithm that allows them to keep people interested by tracking the minute details of their movements and suggesting stuff. Very similar to Facebook, where you get caught in a rabbit hole. I'm sure we've all done it, where your 5 minutes of just looking at that one video turn into 20 minutes of looking at the following 10. Now, where this is going is that there are companies that can use those same algorithms to have a look at regular choices we make. The best example is the food shop. Anyone, I've got a young family, and the food shop represents something that is a weekly annoyance, but it's a necessity. I can do it online, but there's still quite a lot of effort involved in me clicking the right things. And let's be honest, the oranges they pick are never the oranges you'd pick yourself. So there are problems. What you can do with it, you can basically use the same algorithmic approach to say, okay, let's have a look at everything you've ever ordered with us, if you're Woolies or Coles, and let's extrapolate from that what you might order next time. And so algorithmic commerce is the idea that you set up, and as a consumer, you would invest in that and say, okay, I will commit to giving you my weekly food shop of $200 a week. I'll outsource all the work. You do all the work for me, and you just deliver it to my door. Now, there's a couple of things that you need to change to do that. There needs to be a clear feedback loop, and that's, we'll probably come onto that in terms of automated comms. But it's a really interesting shift. And what companies are trying to do is they're trying to move people, obviously, towards this idea of monogamy. Feeding back to the idea I was mentioning before, the idea of people online are a lot more. We've got a lot of choice. It's not hard for me to completely switch my regular grocers or whatever to somebody else. That's very, very easy for me to do. And therefore, there needs to be a move towards a recurring revenue. And you can see that with some of the big players. So Adobe, for example, had only 10% of their income was recurring revenue in 2010. It's now over 90% in 2019. Same with Apple. Always, I think it's a bit of a cheap one, I suppose, but I always look to Apple. What are Apple doing? And that's normally a fairly good indicator. They've got an awful lot of money and an awful lot of sway. So Apple are doing something really interesting. In Q1 of last year, they had a 10% revenue bundle. By Q2, they'd up that to 24%. And I think recent statistics says it's close to 28%. So they're really noticing this recurring revenue. And you can see that with the various streaming services that they're pushing together. I think that's a really, really interesting one to track, where you've got some very, very big players able to come in and disrupt sectors, most notably TV streaming of late. Disney, etc., have done a fantastic job of jumping in as a brand new player. And I think why Disney's an interesting one is that if anyone remembers back to kind of like satellite TV 5-10 years ago, the Disney Channel wasn't particularly well regarded. It wasn't doing particularly well as a product. But some strategic purchases, namely everyone with a child. I've got a young daughter. Yes, there was her birthday, Phoebe. I don't imagine she's watching this. She's only 4. And another one on the way. Anyone with a child, I think, is pretty much in a situation, I'm not going to say bullied, but is highly motivated to add Disney as a streaming service because it represents such a key resource, and strategic purchases with Marvel and Fox Studios in order that they've recently launched Stars to try and get that adult market, I think is a really interesting one.
Yeah, and I'm sure there are a lot of people watching this that have young children, and they're nodding saying, oh yeah, I know the impact that Disney is having in our house. It's on 24/7. Thomas, in regards overall, what is the market telling us, and how are the changes going to impact the economy?
So I think the biggest change that sort of both of those things kind of allude to is companies' commitment to automated comms, which is kind of the area of expertise, I suppose, in terms of where I work versa. Where they've had a huge increase in people wanting to contact. So contact centres, particularly call centres, have had a huge increase. Governments reported a 40% increase at the beginning of the pandemic of people calling up. Now, I think that's really interesting because call centres are generally kind of felt perhaps a little bit archaic, where everyone talks about chat and they talk about email. But the reality is there is still a real desire and a real motivation to talk to a real person. Yeah. That role of empathy feeds into that idea from a business point of view of monogamy. I'm going to stay with you if I feel confident that you have my best interests at heart. And I think, again, it feeds into what the other guys have said in terms of that regular contact. That can't be automated. I think what's interesting is there is a part that can be automated. Optus have recently released a study, which I think is really, really interesting. They've doubled down on the amount of their communications that are done through chat. So about 80% of their inbound customer relations are automated or automated to a degree. Now, I think what's really, really interesting is that they've found that their highest CSAT scores. So obviously companies are very, very keen on ensuring that their customer relations are good. And the way they do that is that you get that annoying pop-up at the end of a thing saying, do you mind rating us? You know, happy face, sad face, probably slightly more complicated than that. But that's the idea, is so that they get an idea of, okay, cool, we're doing a good job, or you know, we're going to have to change things. Now, what's really, really interesting is over the last 12 months, we've seen a shift to, particularly in this Optus case study, to allow the highest scores they've got for their CSATs have been a blended approach, where a user has an automated experience up front that triages them through to a human at the end. Now, I think that's really, really interesting. The idea that a blended approach is getting a higher score than a human on their own. And I think what that shows us in terms of, I guess, maturity of consumers is that they now, chatbot is no longer a dirty word, and people are understanding how they can utilize that to reduce call volumes to zero and to get to the information they want. A great example is a case study we had recently with Wilson's Marking. We just did a very, very simple proof of concept where we automated just one use case at the beginning of their interaction, and it saved over 55 hours in the first month. Now, I think when you extrapolate that into larger businesses, you can really start to see the kind of cost saving even very small amounts of automation can make. And so I think in terms from an economic point of view, I think it's looking at businesses that are making that investment in conversational technology and automated comms, but in a blended sense, that are definitely ones to watch for. And conversely, companies that don't appear to have acknowledged that that's a valuable thing, I think that's definitely something it would be a red flag for me.
Yeah, absolutely. And Thomas, just on that chat function, I agree. I think we love the immediacy. Jump on the chat function, they respond in an instant. So you're not on hold forever. And I know I had an experience last year, chat function with Optus. Somebody called me, the person couldn't have been more helpful. I was quite overwhelmed by the service. I was looking on their website for somewhere to pay a compliment. Everyone contacts them to criticize or give negative feedback, but I wanted to give them a compliment. And I think that chat function and then talking to someone is a fantastic initiative. And I know that I've certainly been impressed. Right.
Sorry, Dan.
No, go.
Just to add to that, I think you're absolutely right. And I think it is about that maturity where many clients have perhaps got, what's the best way of phrasing it, perhaps an off-the-shelf chatbot function, and they've thrown in their FAQs, and then they've kind of scratched their head as to why that didn't quite work. I think the key missing bit is the empathy I alluded to slightly before, and the idea that really this chat functionality needs to be considered as a brand new channel. One of the things we often find ourselves doing with our clients is to help design an empathetic, it's about conversational design, not so it sounds like a human necessarily, but that it's able to blend in with that, and you were able to get the information you're looking for very, very quickly.
Absolutely. You feel like you are being heard and listened to straight away. Thomas, thank you. We'll get to some of our questions today from Linda. Hello, panelists. Hello, Linda. Linda, we'll fire this one away to you, Beatrice, because I suspect you'll know the answer. I'd love your take on the allied healthcare space and its growth/contribution in the future in Australia and then globally. Beatrice.
Yeah, it's actually pretty interesting that, even though our role as economists is to focus more on the economy, but increasingly over the last couple of years, we find ourselves, going, putting on our political analyst hat with, geopolitical tensions. And more recently, we also have to learn to become epidemiologists, given, some of the COVID cases and learning things about, mRNA technology, RNA, et cetera. Now, I would say, even with the past year and what I've learned about medical terms over the past year, I'm certainly not an equity analyst, focusing on the healthcare sector. But, I would comment more from a macro megatrend perspective. And, on this front, I do think that there could be more demand for, this sector of the healthcare space, particularly pertaining to, things like aged care, mental issues, as well as, disability. Once we consider things like structural trends, for instance, like demographic headwinds with the population, across the world, as well as in Australia, aging rapidly, that could also, increase the demand for this sector of the healthcare space. As well as, if we think about more cyclical influences or near-term influences due to COVID, I know quite a few people, especially my colleagues, who have gone to see, their physio increasingly more often during the COVID period, just because of, back pain, neck pain, hip pain, because of working from home.
Yeah.
For so long hours, what Thomas mentioned, the living at work phenomenon that has started to weigh on some of, some of these aspects on our health. And even on the mental aspect, I think that's also something, again, that Thomas alluded to, the empathy, the role of empathy. I think that's something, with regards to mental well-being, that's something increasingly people during the COVID lockdown period have started to appreciate more. And I do know that, mental hotlines have actually increased the number of calls they got, especially during this period.
I think, if you don't mind, there's another thing I'd probably add to that. More specifically, aged care, I think, is where we're likely to see a huge disruption on account of exactly the technology you kind of mentioned there, Beatrice. I think there's a fact, annoyingly, I can't remember the name of the company, but there's a company in the US that has set up an automated voice check-in service. So certain patients will get an automated call from I hesitate to say robot, but let's just say it's an automated call where it will say, how are you doing today? Tell us if you've got any increase in your pain, and the whole thing's automated. Now, what's really interesting is that even though that's an automated call, the patients in those elderly care situations reported a huge increase in their feelings of independence and their feelings of being heard. So much so that some of them were saying, no, I can't meet you for coffee now because I've got my call with my robot a bit later on, so it'll have to be afterwards. And I think that really opens the door to how, particularly in aged care, there's an opportunity to use this technology to give people a level of independence that's almost unheard of. Even the simple things around smart homes and, Siri, turn off this, and, all of this kind of stuff that many of us have had a little go with and stuff. For somebody who is in a situation of perhaps not debilitated, but declining health or declining physical ability, those minute automations could represent an extra 5-10 years worth of independence. And I think that will be a really interesting thing to watch, whether the private elderly healthcare providers are starting to invest again in exactly that kind of technology.
Yeah, sounds really positive and something I think clearly, well, I know that we need to address in regards to aged care. A question from Shannon, and we'll head this one your way, Dan. As you're aware, the Victorian property market is booming. I'd like to get your thoughts on the time frame for this boom and your thoughts on property growth in Victoria for 2022. I don't know if anyone predicted what we're seeing right now. I know I certainly didn't.
No, I don't think anyone has. I know the last webinar that, Brad, you were a part of, our Ask the Experts property webinar, I had a quick chat to Jason, who's one of our experts, about some property questions that I had a feeling might come up, being that it's such a hot topic at this point in time, along with everything to do with the economy and everyone's financial well-being. But yes, it is a hot market at the moment. There was an article that was circulated the other day from one of the major banks just around the numbers from February. And, main capital cities being Melbourne and Sydney and Brisbane, I think it was a growth of 2%, talking about auctions and clearance rates and the like. This time last year, there was 400 auctions at a weekend. Now we're seeing 1,000 auction weekend with a clearance rate, early 80%, which is phenomenal. In terms of one of the things that I'd like to do in terms of any property questions, because it's really something that, for me, I'm not that expert. But what I really want to do is make sure that people get a personalised contact from Jason, our Tribeca expert around property, just to talk about some of the considerations and what that looks like in terms of those trends. But to touch on really the themes, we are seeing a lot of the changes in people moving from the city and making tree changes and sea changes. So we are seeing it across the actual state. And when I say state, we're actually seeing across the states people are jumping states because they're scared Victoria is going to go back into this catastrophic lockdown at any given time, and they either want to go to Queensland and catch some sun, they want to be closer to family interstate, or they've just really had enough of the way that things have been operated over the last 12 months. So we are seeing a lot of people just overpaying for properties to get out, or they're wanting to really make that move a permanent thing. Some of them have sought advice, and some of them really have just decided this is our lifestyle change. So we do see that with some of the, I guess, the dawn commentary that Beatrice was talking about before, and the positivity that's currently flowing on and the themes that are travelling. We don't see there being really any changes to the trajectory or the growth. I think it's just a matter of the supply and demand. There's some changes that I've spoken to some clients about. They've had investment properties that they can't tenant. So now they're deciding to put it on the market because the market's running hot. So that's going to continue to trickle that supply into the market. But the demand is certainly hot because of the interest rates. Now, Jason certainly going to add some further commentary. Sorry, Beatrice, what were you going to say?
Sure, I was just going to add one point. I think besides supply and demand, as you touched on in your closing sentence, I think there's also a fear at this moment in terms of, what would happen once, policymakers start to, increase rates. I think there's a huge fear of that in the markets currently. We have seen, rates both here in Australia as well as across the world increase quite massively over the past month or so. But, I think what I would like to say here is that, we do think that the housing strength has room to grow further, especially, as Dan mentioned, with regards to detached housing, given that more people are moving out of the city into, bigger houses. And, we do think that even though, there's a concern of asset bubbles, that, low interest rates are contributing to asset bubbles instead of consumer price inflation, we think that, that concern is probably a little premature at this stage, given that, the RBA governor as well as the central bank, have constantly come up and say that, they're not expecting to hike rates anytime before 2024. And we think that, during this time, even though, that there are concerns about asset bubbles, but I think to some extent, the increase in house prices could also have a positive financial stability impact in terms of the short-term financial stability risks, in terms of increasing wealth effects, which will thereby, support consumption as well. And so that's why I think, so far, the RBA has been, pretty patient with allowing house prices to run a little bit hotter instead of using interest rates to cap that, because, there's always a balance between short-term financial stability with regards to, whether you hike interest rates, and that could essentially lead to a huge increase in default rates and affect consumption, and balancing that with longer-term stability, financial stability risks with regards to asset bubbles. So I think there's always a balance there. And at this point in time, I think, central banks around the world are prioritizing the short-term financial stability risks.
Linda, to your question there, you'll see that Thomas has posted the link in regards to the company doing the automated check-in with aged care. Let's recognise and let's acknowledge those organisations doing innovative work. From Michael also, Thomas, where do you see the greatest opportunities in the financial space for users in terms of taking advantage of emerging technology moving forward?
So I think this might be an unpopular one, but it's something that I'll definitely mention, is the power of that same algorithmic functionality is the sort of thing that could be developed to automate trading in reality. And we've seen that in some of the larger places where they have started to invest in algorithms to start to take all of the joy and interest and personality out of the investment market, and you just let a robot do all the work. So I think that is probably something that's interesting, and it's probably something to take note of. I don't know if that's, how readily that will come into consumer hands. I think it's more likely to be restricted and used by the larger financial institutions at this stage, but it's definitely something to make good of. I think, to be honest, regardless of the sector, it's that customer experience thing where this technology has the opportunity. So, for example, again, Dan made a great point about it. Your finances, just like your health, shouldn't be something that you only periodically jump into through fear that you find something you don't want to see. It should be this regular checkup. And I think, again, part of what automated comms does, and I wrote an interesting article entitled "Why We Don't Lie to Robots," which kind of elucidates this point, which is about why, when we're talking to a chatbot, when we're communicating through that channel, we're likely to be a lot more honest than we are when we're talking to people straight up. And I think a great example of that is, I'll hold my hand up, so I'm not going to embarrass or ask anybody here, but when your doctor says, "How much do you drink?" I think most people fall into the trap of saying, "Oh, maybe a glass with dinner." Now, if you're anything like me, when I say glass, it's a very big glass that's shaped like a bottle, because it's a bottle with dinner. But there's something about our social interactions that generally stop us from being honest. And I think it's probably the same to suggest that that's the case with our finances. How much do you regularly save? How much have you got in the bank? Those are quite big questions to ask up front. So I think where automated comms and a development in that technology could be interesting for finances is in that first contact, is saying, right, I'm not quite sure whether I'm willing to fully invest in a personal connection just yet, but maybe I can test the water a bit. I can do some of this work myself, give them the honest answer, and maybe get some suggested projections of what that might mean. Obviously, the big, the elephant in the room is how tightly financial advice is regulated, which would be a significant thing to overcome. But I still think there probably is a middle ground where, I think we have to give consumers credit. I think if we say to them, what you're about to get is not advice, you shouldn't necessarily follow it to the letter. It's an opinion that has been automatically generated, but it's been automatically generated by a company that you trust, that has a lot of data to back up that opinion. We're not saying act on it, but we're saying this is giving you more than a finger in the air. Yep. And I think for many people, that's the middle ground, that, where the opportunity lies.
We're quickly approaching 11 o'clock. What I would like to do here is quickly just get to a few answers from the questions that we have, because then we'd like our experts to share their key takeaway with you before we wrap things up. Just on that technology from Michael, Thomas, what's the best way to work out how AI can help me in my business? Is there a lightweight, an audit or similar that can take place?
Yeah, I think it's obviously part of the initial contact we have Versa agency as a company is we can come in and we can basically work with you to do a bit of upfront work, what we would normally refer to as blueprinting, where we would kind of do a bit of an audit and say, look, where are the opportunities internally for you? Maybe you've started with a chatbot, but it's not really doing what you want it to do. And so I think it's about working with experts, because although there's a lot of off-the-shelf stuff you can just pick up and drop in, the reality is, in order to really make the most out of this, you need to engage with people who know what they're doing. So yeah, a lot of the work we do is that initial setup for companies who are just looking for a bit of a steer, maybe a digital roadmap, particularly something that's a little bit longer term. I think the interesting thing with this tech is that it's very much not one and done. Version 1 of this, because it's something you interact with, you can just imagine the amount of data you're getting all the time. So, when you first launch them, you're quite expecting 50-60% of the interactions might not necessarily be able to have a stock response, an answer to, but obviously very, very quickly, if you invest in a long enough time, it very, very quickly ramps up, because you're taking the rich data, first party data from your customers to then inform each cycle of development, which I think is really good.
Quick question, relatively brief answer if possible. The Aussie dollar, what's going to happen? Dan, Beatrice?
Yeah, I can take that. I think so far, high commodity prices, as well as a relatively slower pace of balance sheet expansion by the RBA here, that have contributed to a very strong Aussie dollar over the last couple of months. But looking ahead, we do expect some modest depreciation as China cuts back on infrastructure spending, as we've seen with the latest data, and that could potentially weigh on commodity prices. And as well as the RBA brings its balance sheet or QE program more in line with other developed markets in terms of increasing the number of government bond purchases they purchase, which will depress yields and, pose a headwind for the Aussie dollar. But at the same time, just to add one more point, exchange rates are always a relative price. So not just what happens in Australia, but also what happens, in other places relative to Australia. And on this front, I think stronger inflation pressure and stronger rates in places like the US, could push the interest rate differential wider, which could also contribute to a weaker Aussie dollar in the coming months.
Thank you, Beatrice. Dan, we had a question, some good stock options to consider going forward. This is very cruel of me to ask you to summarize this in about 30 seconds, isn't it? I'm sorry.
That's okay. Look, whilst I'm not a stock picker or a trader of that level, I think when we look at the economy and us coming out of this dark ages into the dawn, we're going to see, tourism and everything else start to return to some sort of normal. So there are going to be things like your Webjets, your flight centre stocks, and those types of things that have come up, and they've started to move with the opening up of the borders and the states and everything like that. And that's only going to get better as vaccines get more improved. And we start international travel again in the near future as well. So we're going to see a whole range of stocks in that tourism area, I think, start to take off.
29, 30 seconds. That was very good. Well done, Dan. You summarized that beautifully. We're nearly out of time. Let's get a key takeaway from our experts. Beatrice, what would be the one key takeaway you would like our listeners to take away with them today?
Yeah, I would say be cautiously optimistic about the outlook for 2021, given, our assumptions for most major economies to achieve herd immunity by the end of this year, as well as for policymakers, to continue providing support, whether in the form of relief packages or stimulus packages. But, given some of the existing fragilities that we touched on, we would encourage investors to stay diversified and focused on long-term outcomes.
Beatrice, thank you very much. Dan, what's the one key point you think that people need to focus on?
Summarize it in 3 really quick key points. Don't keep up with the Joneses. Seek advice early. And if you need help starting that conversation, please contact us at Tribeca Financial and we'll help you to start facilitating that conversation.
Dan, thank you. Thomas, what about you?
I think the big thing is to start to think about AI as augmented intelligence rather than artificial. I think that's a very useful term to start to think about. So what you want to be looking for are companies who are investing in a blended approach to technology. It's not about the removal of the human. It's about augmenting what we and they are able to do, both from a consumer and from an employee point of view. I think that's where the opportunity is.
So basically what we're saying, Beatrice, in finishing that, we heard your positivity last time, but I love the way you're saying be cautiously optimistic. We're not, don't go all guns blazing, but there is reason to be optimistic heading into this year.
Yeah, there are also reasons to be not too optimistic.
Yep.
You're balanced. There are risks on the downside as well.
Yeah, absolutely. But I think considering what we experienced over the past 12 months, just gone 12 months, I think to hear optimism and positivity, I think it's something that we all need. And as we've discussed, for our own mental health and well-being, we need to focus. We need to focus on the glass being half full rather than being half empty because, it's been a very unusual and a testing 12 months. So fantastic to hear. To our panelists, to Beatrice, to Dan and to Thomas, thank you very much for your time. No offense to all of our other Ask the Expert series experts, but this has been fantastic. I know how much I have enjoyed it, and they're all fantastic. But I think as we're heading into the year with optimism, as we heard Beatrice say, it's just great to get your insights and your perspective on what is coming up. Thank you to everyone for attending. A reminder, the webinar has been recorded and it will be emailed to you after this session. And as you can see, Lisa and Georgie have been putting all of the links in the chat box. So if you need any information or you would even like to deep a little bit further into what Thomas or Beatrice or Dan was talking about today, just jump on the links and it will give you all the information that you need. And you'll see there that Dan's also got his number up there. So if you just like to say hi to Dan or have a good old chat,
Start the conversation, Brad. That's the first point. Let's start the conversation.
Start a conversation. That's what we know. It's all about starting a conversation. So to those of you that were able to join us, thank you very much. I know how much we have enjoyed it, and enjoy the rest of your afternoon. Thank you.
Thank you.
Thank you.